Welcome back. I say this over and over again when it comes to the real estate market and mortgage rates. Everything has really kind of trended in a positive direction, it seems, from the outside. And to join us today is Steve Tetzner. Steve is our mortgage pro. And Steve, welcome back to the show.
Thank you. Appreciate it.
Can you tell us, I think the last time we had you on was about a month ago, towards the beginning of the year. What's changed and what do the rates look like right now?
Really no change in rates. We haven't seen any significant change in rates in probably the last 90 to 120 days. The market's been pretty flat. We'll see day-to-day minor movements, positive, negative, but for the most part, everything's status quo. 30-year rates in the mid-twos, 15-year rates down right around 2%. So the market's very good. If you haven't refinanced, don't miss the boat.
Yeah. Can we go any lower? Is it possible?
I don't know. People ask me that. It's, I think our country would be in a full-blown recession, possibly depression, I guess, if rates get any lower than they are now.
All right, good perspective. I won't hope for lower rates then.
No.
All right, so as the spring market kind of comes around for real estate, I think a lot of people, that's and the lawns look good and the houses look better and it's not cold out and the vaccine is here and people wanting to get out and about more. One of the things I think that you and I discussed that we want to kind of bring to the show is, how can people prepare themselves for this spring market? And so what are some of the things, let's say for a first-time home buyer, what would be the process that you would tell them and when should they start it?
They should start immediately. Get hooked up with a realtor, get referred to a really good mortgage person, and start your pre-approval process. Start organizing your financial documents, have them reviewed so that you have your pre-approval letter ready to go. Have a credit check done. See what's going on with your credit. But you really want to be proactive. You don't want to be out there and start looking at houses and then find out that you have an issue 60, 90 days from now. So address those issues now so that you're prepared when the spring market comes.
If you could tell our viewers, what does the pre-approval process look at and do? Like, what are the different factors that you're looking at?
So basically, we're going to look at income, assets, and credit. So we're looking at someone's qualifying with their debt-to-income ratios, what they can afford for a house based on what their income is or their qualifying income. We're looking at their assets. Do they have a down payment? Do they need a first-time home buyer no money down program? So we're kind of doing an overall financial analysis of the person. Generally, you're going to need your W-2s, pay stubs, bank statements to do a formal and truly legitimate pre-approval.
Okay, and how long does that usually take you?
Within the same day. If somebody's organized, if they send the documents over to me, it takes me about 15, 20 minutes to do a basic analysis and then have a discussion with the borrower. So everything can be wrapped up within an hour.
And then they've actually got this document, they enter into trying to buy a house, and they've got this pre-approval letter. Let's say they did it, sometime in February. How long would that pre-approval letter last?
Well, the general rule of thumb is 90 to 120 days, but to renew it, you just have to contact your lender. And as long as there are no significant changes, like you didn't go out and buy a car, you didn't change jobs, you haven't been laid off, then the pre-approval letter can very easily be extended.
Okay, all right. So at the very least, you're telling our viewers, if you're thinking of getting into, a purchase, start right now, have that ready to go, because the way the markets are right now, they're so hot, you got to be ready to jump right in and make your offer and be there.
100%.
Is there something that, first-time home buyers might want to be cautious about when entering the real estate market that maybe doesn't have too much to do with mortgages, but well, maybe it does have to do a lot with mortgages. With the hot market, what should a first-time home buyer be cautious of?
I think that the biggest frustration for the first-time home buyer is that the lack of inventory. There are so many people out there. If you look on Facebook, you'll see open houses where there's literally 40, 50 couples lined up to get into the house. So I think the frustration is really going to be with the inventory. And I've had clients that have made offers in 7, 8 houses and still don't have an offer accepted on a property yet.
Wow. Okay. Is there anything they can do to try to be? Obviously a pre-approval letter is one thing, having more cash on hand? Does that usually help, or do you pretty much have to go with all cash on hand?
No, you just have to try to put yourself in the best position that you can, and what your qualifications are. They are what they are, so you can't change that.
Okay.
So you just have to put your best foot forward and make sure you're working with an experienced realtor.
All right. As part of that pre-approval process, I wanted to talk a little bit and let people know a little bit more. How does the FICO score work? What are the different factors in there?
So that's a big thing with the pre-approval too, running the credit. So there's 8 different models of FICO. And basically the FICO it stands for Fair Isaac Company, and it's the scoring model. Each bureau has its own, you get a score from each bureau, each of the 3 bureaus. In the mortgage world, we use the middle score. We do run a full hard check on the credit. A lot of people will come to me and they have these services like Credit Karma or whatever. Yeah. Those are not your real FICO score. You have to actually have a lender pull your credit to get your real FICO score. I have people that come to me and say, hey, my FICO is 660, I run it and it's 600. So you really want to prepare for that. And your FICO is going to affect your qualification, and then it'll affect the interest rate that you can get on the mortgage. And if you have PMI or private mortgage insurance, it also affects the rate for the PMI. So the FICO is very, very important in not only qualifying, but in the terms of the loan that you're going to get. So that's why you want to do your pre-approval now, because there may be minor things that you can do to change your FICO profile that, when we do have to run the final credit, when you actually find a house in 2 to 3, 4 months, we could manipulate that in a positive way and make the credit scores go up so that you can get better terms on your loan.
So the FICO score itself, you're saying even within 30 or 60 days, you can actually make that grow at a decent rate? Well,
with most people, we can do things like pay off debt, move credit cards around, increase credit limits on credit cards, just different things. We have different scoring models that we can look at, pay off debt. It just depends. Sometimes opening up new cards. It just depends on the person's credit profile. But there are different things you can do in the short term to manipulate your FICO score.
And you actually help them do that? Is that what you're saying? Or do they actually use a third party?
Yep. No, we actually do that. We take classes on this and do seminars and work directly with a couple of the different credit bureaus. We actually have software that we can use that says, hey, if we want to get the FICO up 40 points, what do we do? The software will give us information and different. So it's actually a really good system.
Yeah, no, I think, and people, you use just it was a common term, but you're saying the terms of the loan are dictated by FICO. And I think just to clarify that, the amount of money that you're going to have to spend for this loan or this new house has a lot to do with your FICO score. So it is so important.
Absolutely.
Yeah. Okay. So let's switch a little bit. And, I think a lot of what we're seeing too now is you have people that are in well-established homes right now, but they want to move to a much bigger home. We call that, I guess, the buying up in the market. Can you tell us the difficulties that people face in that situation where they have a house that's worth a decent amount of money, they've paid down some of the loan, they've been there 5, 10 years, but now they're saying, listen, the market, the rates are so cheap, I can go in, I'm in a $500,000 house, I can go buy an $800,000 house and I get my dream house right now because it's so low. What are they facing for some difficulties in that situation?
Again, the supply and demand is such a limited supply right now that it's truly a seller's market. And a lot of people, what you need to be able to try to do is to see if you can qualify to buy the new home where it's not subject to you having to sell your existing home. And that, again, that's part of the pre-approval process. There are bridge loans, different things that you can do to put yourself in a position where you can make an offer on a house that's not contingent on with you having to sell. In most cases in this market right now, if you have a contingency on having to sell a home, you're not going to get your offer accepted because there's 3 people standing behind you that are not going to have to do that. So it's the chicken and the egg. If you put your house on the market, it's going to sell very quickly. Now you've got to find the house that you want to buy and the inventory is low. Or, so this is really, seeing if you can qualify without having to sell is really going to put you in the best positive situation in terms of getting an offer accepted on a property.
So will your rate, just very quickly, if you had that house worth $500,000, you had a loan on it, you had some equity in it, and you've got this new one, in a sense, are you ultimately saying that at a certain point in time, well, not initially, if you're saying I don't want to be contingent because I want to go to the table ready to go, that you need to be able to qualify for holding 2 mortgages? That could be a huge amount of money on both of them.
That's correct.
And is that very difficult to do, or?
It just depends, it depends on the market. But I mean, I think in the lower, the people who were the first-time home buyers and that have the $250,000 to $300,000 houses that want to move up to those $400,000 houses, I think it's more difficult for them. Usually in the higher end markets, we see people do that all the time. And then also in the higher end markets, what we're seeing is people are turning themselves into cash buyers.
Right.
What they're doing is they're removing the mortgage contingency. So they're going into the offer and saying, look, not only is this not contingent on me selling my home, but I'm so confident that I can get a mortgage that I'm not going to make my offer contingent on my ability to obtain financing. And that's a very, very powerful tool. The more contingencies that you can eliminate in your offer, the stronger your offer is going to be.
Okay. And I think this probably answers one of the questions I had. So does a seller favor a cash buyer versus just someone who's gotten pre-approval?
Absolutely. But even the pre-approval where you're removing the contingency, where you're saying, well, look, I'm going to get a mortgage, but I don't need to make my offer and the contract contingent on my ability to obtain that money because I know that I'm financially strong enough that I'm never going to get rejected. The chances of me getting rejected are so slim that I'm willing to take that risk. That turns you into a cash buyer. And the seller is absolutely going to look at that. The less contingencies on the sale. We have people right now that are removing inspection contingencies.
Wow.
They're bidding over the list price on the house saying, look, I'm buying the house, cash offer, no mortgage contingency, no inspection contingency. Done deal.
All right, a lot of good information, Steve. A lot of times we just talk about the real estate end of it, and just buying, but there's so much that goes into it. You actually have to sell yourself in a sense and just be super prepared to be the winner if you really want that house. So as always, thank you very much for the great information, and we look forward to talking to you soon. Okay, when we return, we are going to talk about the investment world today and the best ways to prepare yourself and your investments for the coming months. Stay tuned.